been flying?
Been doing lots of flying. We can talk about that too. That'd be fun.
You were the pilot, right?
I'm the pilot. Yeah.
Okay. What do you fly?
A Cirrus.
Okay. I don't know about private
It's
jets.
it's a single engine 4-seater.
Okay.
It's the one with a parachute. You pull it and it goes into
Oh,
a
wow.
parachute.
Okay.
And then a TBM, which is a turbine engine.
How long have you been flying?
Single engine. 2014.
Okay. All right.
2013.
What made
actually.
you want to start doing that?
My son was taking his first solo at 16, and I was standing on the tarmac with my wife, and I knew the plane that he was in, and I wanted to. I was like, I better learn how to do this.
Yeah. All right.
16, he was flying.
Oh, wow.
His solo was fun.
Okay.
Really fun.
Very cool.
Yeah,
I'm
probably
terrified of that stuff, to be honest.
I probably put about 1,200 hours in a plane with him.
Oh my
I've
gosh.
thought about getting a license.
If you thought about it, you should do it because it is one of the single greatest things I've done.
I know there's a lot of places out on Long Island that'll do the classes.
Oh, yeah.
And take you up.
Every airport will have it.
Mhm.
There's no greater peace.
I had enough
than
anxiety.
being in a plane and just yourself in the engine, and you got to land.
Oh,
I
dude.
love planes and flying. So
I went on a
Zero
Cessna
chance.
airplane for the first time.
Yeah,
I went from Boston to Provincetown.
yeah.
It was so fucking cool.
It's so cool.
They're so tiny.
It's so cool.
It was amazing.
Yeah.
The pilot was a fellow bald. I appreciated
Oh,
that.
well, good-looking guy.
Great looking guy. It was really awesome.
It was so. I enjoyed
forgot
it
you're a
so
pilot.
much. What's that?
How often do you fly?
At least once a week.
Oh yeah?
Yeah, yeah,
That's nice.
yeah. I do it for business. I do it.
Well,
We've been
this-
to Catalina Island. We've done it. We've circled that Apple picture of on the home screen
yeah.
and took it ourselves.
In California?
Yeah.
So cool.
So it's a Cirrus. So you have to stop and do an overnight. But yeah,
Wait, from the East Coast all the way there? Wow.
not in one trip. I
Right.
mean, you got to stop and
like
get
where the
gas, but-
Catalina wine mixer
Yeah.
was. It's no joke. That's no joke.
Pow.
It's no joke. Do you remember the movie with the Catalina wine mixer?
No.
Step Brothers.
Step Brothers. Did you ever see that?
All time.
Will Ferrell and
If
what's
it's
the
Will
other-
Ferrell, it's funny.
All time.
What's the
all
other
time. John C. Reilly.
John C. Riley. So
Funny.
And Mr.
the
Doback.
climax of the movie takes place on Catalina Island. The family business is like selling helicopters or something,
yeah,
or
okay.
private planes or something.
Yeah.
And they have a band to entertain. It's like a cocktail party. On
80s
Catalina.
Joel.
So it's Horatio Sands from Saturday Night Live as the lead singer, and they only play 80s Billy Joel.
Like
Oh,
only
that's
80s.
awesome.
80s Joel. So people are like shouting out requests from the audience, like Piano Man. He's like, what part of 80s Joel did you not understand?
Oh,
I mean,
So exciting.
we landed there. It was so great.
So good. All right, hold on. That is way too.
Jill, do you love it?
Ladies and gentlemen, Jill on money.
Hi.
Well, good?
Oh yeah, just
Okay.
we have to have you on the air tomorrow morning immediately, before and after. Whatever, it's all good.
Why? What's going on?
Nothing.
Okay. Anything I need to know about?
Nothing
Okay.
at all.
All right.
Michael,
So
do you want to explain?
so I was telling Josh and Nicole before we started that when I was in Provincetown, I said to my wife, I was like, "Oh, I should text Jill. I'm in Provincetown.
Yeah,
I'm
she's
staying here
gay.
2 weeks." Everyone was like, "What? You're gonna text her because she's gay?" I was like, "I don't. And I'm seeing her in 2 weeks.
Maybe she has an
I
apartment
feel
there.
like I don't know.
So not. You know what? That's not where I roll.
So
I know.
I'm like, what? So I texted you, and then like you didn't answer me for 10 minutes. I'm like sweating, panicking. I'm like, and then you text me back with the gift. These gays are everywhere, and I said, "Robin, see, I
Okay.
told you."
These gays, they're trying to murder me.
Yeah.
So that's Jennifer Coolidge at the end of White Lotus season
Correct.
2. She's trapped on the yacht.
Yeah. Do you know these
And-
gays? They're trying to murder
Yes.
Yeah, yeah, yeah.
me. It's a great meme.
The sound her head makes hitting the boat. Did you watch that show? Amazing.
He's a serious guy,
Yeah.
and you having me on with him,
Oh, you
I think
have
it's very
no
bad.
idea.
Tony's a
bad.
pilot.
Hey guys,
I'm predicting greatness.
You
Did
do?
she just call
I
me a
love
serious guy?
I love the combo.
Tony's a pilot.
I love the combo.
How was your summer?
all I'm doing is on that goddamn bicycle. You know who hasn't given me money for the ride?
Oh.
Whoa.
Was I supposed to? When is it?
Wow. You
When
just
is
got
it?
your biggest
Michael.
donor now.
Michael, it was so long ago that you made that very generous donation. I so
Immediately,
appreciate that.
right?
Immediately.
Yeah.
Hold on. What?
Also, Jay.
I support my friends.
Jay also.
What's the deadline? Did I miss it?
Well, it depends how much money you have to support the
What,
ride.
did you do the ride already?
No, I did
Are
not.
you training for the ride?
Yeah.
All right. Can you resend me? I wanna be part of the solution.
Do you want to be? Do you want to be like I am, which is I want to be the largest donor? That's always what I want. I want to be. I want to stand out.
Can I show you something?
Mm.
I'll show you guys something. So I didn't think this was offensive. We're doing a closet. We have a closet guy. And he sent, like, as one does, a CAD, a computer assisted design, like a schematic. It's going to be my wife's office, which is going to be in a closet. Which it sounds weird, but it's not.
Oh, you
It's
take
like
a Tara's
big,
bed? You take a
expansive
Tara's
closet.
bedroom?
No. This is for Florida.
Mm.
So I didn't like the design. It had the shelves facing her on both sides,
Mm-hmm.
and it looked like very cubically, like almost like an office. But this is in an apartment.
Okay.
So I said, let me take a crack at the design.
Oh, stop it.
No, I didn't. So I did. So I did.
Did you actually draw this yourself?
Dude, this is dope. This is the dopest closet ever.
Wait, so
That's
are you
dope,
making her
alright.
do? Wait a second. I want to just turn that around one more time. So she's sitting at a desk.
Crying.
So Sherry's
that's
sitting at a desk.
Sprinkles in the middle at her desk. And then what I did was I did like cubbies around her of her bags and shoes. And I'm going to like backlight them. I'm going to Carrie Bradshaw this whole thing.
But can't she get her own office? Like, not that, like what?
Well,
No, nobody
office-
puts baby in the corner. Nobody
Dude.
puts baby in the closet.
Time out. Office to do Lululemon returns? Like, let's
Oh
not.
my God! I want to meet her because she knows.
I'm,
is she gonna be
I'm
in
joking.
California?
She's our CFO. She pays all our bills. She's incredible.
She's also the investment
He's joking. She
manager
does
here.
aloe
But
returns.
look at the
not
beautiful
Lulu.
office I built for her. And we sent it to the closet people.
Yeah.
And they sent back a smiley face emoji. So I don't think my design is going to be the final.
love it.
Final say on the closet office.
I just
but-
want to thank you again for my lovely shirt.
You
love
are
this.
welcome.
So awesome,
Ooh.
Nicole. I feel like you may have had something to do with this.
No,
No.
I just
No?
found out today.
Oh, really?
Well, Michael's
love
great.
it.
Michael's actually a great gift giver.
Okay, hold on.
So
Really?
I'm a
are you,
giver.
are you a good gift giver? Do you come up
Really?
with like the
I don't
perfect?
know anything about that.
I'm not good at that stuff.
No,
I'm
you
pretty-
are. Yes,
I'm
you
pretty
are.
good gift
I'm
giver.
mostly a gift certificate person, though. For
I
the
hope
most
to
part.
be a good gift giver. Others, others.
That's I'm not a good gift giver, but I admire and respect gift givers.
I'm coming off of 2 weeks of vacation, which included 3 consecutive weddings on August weekends.
Really?
So speaking about gifts,
Have you been out east the whole time?
no, we were out east for like a week and a half, but we had a wedding in the city. My sister's daughter got married. It was beautiful. Then we had a wedding in Maine, and then followed by a wedding on the North Fork of Long Island.
Okay,
But
I love it up there.
it's beautiful. I mean, but the
Where Greenpoint,
Southold.
Greenport, Southold. Yeah.
Southold is where we were. But I mean, have you been to a wedding lately?
I have my the company I'm working at now, which we'll talk about. One of the co-founders got married in June. And
Wait a minute, how
in
old is this
July,
guy?
my 28, and my son's getting married November 1st.
Oh wow! Oh, look at that.
Did he
Mazel
just
tov.
steal your thunder?
I was about to say, my
That was the
God.
easiest question that you're going to ask.
What I was going to ask was, well, of course, it's your own kid, but the amount of money that weddings cost
To
and
throw or to be a guest at?
both.
Both.
Yeah.
Who are
Everything's ratcheted up
Who
now.
did you talk to who was talking about destination weddings? And he was like, well, I had a destination wedding.
I don't
It was-
know.
I don't remember. One of
So he's
these
probably
guys.
calling them assholes, and he's like, "Oh, I did one of those."
Yeah.
Somebody complaining.
Who was
it was
Who?
it was a haul.
Todd Stone.
It was just
Oh,
it was a
maybe,
haul to get up to Maine.
No, but
So-
I have a take on destination weddings that I think people were surprised by. I think they're great, and I don't understand what all the complaining is about.
Yeah.
If you
I
belong
went
there,
to one 2 years ago. Yeah, 2 years ago in October in Spain, in Mallorca.
great.
It was awesome.
people act like they're going to live
Absolutely
forever.
awesome.
Go to the wedding. What's wrong with you?
My one of our nieces married a South African, so that's why we went to South Africa earlier
Oh,
this year.
wow.
And so,
Oh, that's a
what
little,
was-
that might
that's
be a little
fun.
too
but
far.
what was cool was they had a big runway. They got married during COVID, and then there was like 2 years later was the party. So all of their friends, his are obviously there, but her friends from New York, basically planned like the trip of a lifetime.
Right.
Basically, they said, okay, we haven't gone away. We're going to save up. We're going on safari together. We're going to the wine country, going to the wedding. It was kind of cool.
I used to complain about my friends' bachelor parties I don't get invited to bachelor parties anymore. And honestly, I think I would probably die if I went on one. So like all the complaining,
Dude,
I got to go to.
You're a dad now.
I got to go to Cabo. What's the big deal? Just go.
Dads
Or
don't
don't.
go to bachelor
No,
parties
nobody
anymore.
wants me.
Come on.
Nobody wants me in any of these
What
things.
you guys don't get this as much. Nicole showers.
So I don't have to do those.
Nicole just rolled her eyes.
She rolled her eye. I find a wedding shower is exhausting and horrendous. A baby shower is worse because I married into an Italian Catholic family where they do baby showers. We're Jews. We don't do baby showers.
Yeah.
Like it's bad luck. So I had to go to all of these. I had to go to a lot of showers. And finally, the last shower that I had gone to in Jackie's family was the bride called the wedding off 2 weeks later. So
Nice.
to which I said,
Did she return the gifts?
that's
Give my
no.
fucking money back.
I said, that's my last shower. I'm done. I said, what? If you were married to a man, he wouldn't have to go to the shower.
Yeah.
Just because I'm a girl, I have to go to the shower? This seems like the
that's a good
worst
point.
thing ever.
That's a good point.
All right, that's it.
Well, so those I've not been
Horrible.
I've not been
worst.
assaulted with. So all right, how we looking, guys? Are we all good to go? All right, let's do the show.
Gonna come in with the 3 claps.
That was part of
The
show.
clippity claps. Here we go.
The Compound and Friends, episode 156.
Michael, did you know Themes ETFs seeks to provide a way to own the opportunities that are shaping the future and moving markets with expense ratios 40% lower than the average charged by competitors?
I did know. And did you know that the current offering at Themes ETFs spans both cutting-edge technologies and traditional industries? Let me give you an example, Josh. Generative artificial intelligence, maybe you've heard of it. The ticker is WISE. And GSIB, global systemically important banks.
You guys, you can see a full lineup of the ETFs being offered by Themes ETFs by going to themesetfs.com today. 156? Guys, I'm predicting greatness out of this show. What do you think? What do you think? You fired up for
Is
this?
there anything else?
All right. What do you think? You excited? You excited?
Right.
Nicole is dancing.
You know we got new art?
What's that?
How great does that
nice.
look?
All right, I love it. Ladies and gentlemen, welcome to the greatest financial podcast in the world. I say that without even a trace of irony. And today's episode is going to be one for the ages. We have 2 incredibly special guests. First up, you know her, you love her. She is an Emmy and Gracie Award-winning business analyst for CBS News, writes and hosts a nationally syndicated column and podcast on the Compound YouTube channel, Jill on Money. Ladies and gentlemen, Jill Schlesinger.
Thank you very much.
Prior to CBS, Jill was editor-at-large for CBSMoneyWatch.com, spent 14 years as the co-owner and CIO of an RIA. Jill, thank you so much for coming by. We always love to see you, and I love the shirt.
And the shirt's the greatest. I'm very excited to be
All right.
here.
And we are also in the presence of
Greatness.
true Wall Street greatness, legendary strategist. Tony Dwyer is here. After 37 years, Tony has stepped away from his full-time role as chief market strategist at Canaccord Genuity to become the CFO of a fast-growing health tech company called Prompt Therapy Solutions. Welcome back, Tony.
Great to be here, buddy. Thank you guys for having me. It's great to be with you, Joe.
You're the
He will
best.
continue as market strategist for Canaccord until they delete the photos, providing keynote addresses, webinars, and media appearances. Tony, I don't say living legend easily. You truly are someone that people like me have grown up watching on television, learning from, reading, being influenced by. I know there are probably tens of thousands of people who feel the way that I do. You have been one of the best. I think you still are. But I'm so happy about hearing about your new journey, and we'll talk about it in a second. It's true that people clapped you off the floor at Canaccord in New York.
Yeah.
When you made your announcement. When did you make your
It was a
announcement?
spur of the
April?
moment. It was, I think, in May.
May, okay.
And then left the firm at the end of May. And it was
Okay.
really a special
Did you
moment.
cry?
Not right that moment, but I got
I think
choked
I
up
would've.
for sure.
I think I
you know,
would've.
I won't. I was in the elevator, nobody saw it, but I'm very grateful for the opportunity that I had and the form that I've been given. It's not many
Did
people get the
14
opportunity
years
to
at
have.
Canaccord.
Yeah,
So it's
37 years in the game.
in strategist years, which involves
A billion.
it's a billion years because the amount of travel, the amount of FaceTime with people, like the role is intense. It's not like wake up, grab a cup of coffee every day. You have to know what's going on and be able to communicate with very powerful people.
Well, I learned from I think the greatest in the business. I don't know if anybody remembers the name Larry Wachtel.
100%.
So when I was at Probation, and I was the one that I went. This is back when they had screens that were green.
Oh,
there were
yeah.
actually no colors.
Yeah.
And the brokers would call up and ask Larry, how do you turn this thing on? Like, what's a Quotron?
Yeah.
Right. And I was the guy that I would answer the phone because they were frequent and very annoying questions. And he taught me how to have a little bit of humility or maybe a little less arrogance, and how to communicate in a way that you guys do.
Oh, well,
What
we,
makes this
we
show
certainly
special,
appreciate
and the
that.
reason I wanted to do it, even though I left the career, is because you guys communicate with people about your life, about the real world, and you say it in an honest way with integrity. And that's the only legacy I care about as it relates to how I was on Wall Street. And there was a time where, he pulled me aside and he said, "Kid, nobody's going to remember whether you were right or wrong. They're going to remember how you made them feel."
Yeah.
Funny you should say that because last time you were on the podcast,
Yeah, right. If you want to hit me, get in line. It's around the block.
So here's where we want to start the show. I had asked you when we first booked you to come on. Okay, so you've called it a career, and it's been an incredible career. For our listeners, and again, our listeners are, for the most part, either professional investors or working at big asset management firms,
Fed
or people,
officials.
or people managing their own money. So it's like a very broad spectrum, our listenership. But I think you must have some really important lessons or big takeaways. Everything that you've learned in your career, you must have, like, in your own mind, distilled down, like, these are the big things. So we would love to just hear from you, like, what are you walking away from your career with that you've learned?
A pile of money.
Pile of money, of course.
Incredible gratitude,
Okay.
right? Like, I think.
But what stock should I buy, Tony?
as my kids would tell you, I got a great idea for what you should buy by what I would short.
Okay.
Right.
Fair. Fair.
So, I think everything in life comes down to one thing for me, my kids, my family. Who can you help?
Okay.
Right? So when I got into Wall Street, it came as a result of we bought a stock. My brother and I bought a stock. We were little kids. We were watching, I think it was FNN at the time, some channel, and it had a ticker. It was the only one that had a ticker. We bought this Canadian stock, and we got smoked.
Nortel?
No, this was before
Free.
that.
I know.
This was
Okay.
This was before lights. So I wanted to get on Wall Street and learn about investing because somebody smoked us on a bad idea.
Okay.
And I wanted to find out why. So when I think about my career and what I learned through it, it wasn't about how much money could I make that week. It wasn't about how can I look the smartest on TV. I'm good at not looking so smart on TV. It was always about what's the message that I'm trying to convey and for what purpose. And, I would guide anybody that's in Wall Street or any other business to do it in a way where you're trying to help the audience that you're speaking to.
Right.
Right. I'm not on CNBC or Fox or Bloomberg or the Compound and Friends to try to look smart. I'm here because I want to help.
Okay.
I want it like you do. You want to be direct about how it works.
Right. So what do you think is the moment of your career where you had the most satisfaction with what you do? Like, you could brag a little. Like, what's the thing that you look back on? I'm sure there were many of these episodes where you just say, that was me at my best.
9/11
Okay. Say more.
actually chokes me up a little bit. So, I was writing for Jim at thestreet.com.
remember.
I was a full-time strategist, but I was getting paid to do that there.
I was subscribing,
And,
so I remember.
everybody came into my office and it was what it was. And I wrote a piece that you can, still find online about how America wins, how we win. And we win by coming together. And we do it aggressively. In times of trouble, you don't come together. You got two choices. You fold or you come together.
Yeah.
And we come together.
I
And
would
that-
argue we definitely did after.
and I remember
9/11.
walking up through Chinatown. You know, after all the events that were happening, I was working on Wall Street at the time, and you know, I was able to get through to my wife and kids and tell them I was all right, which was great. But then I think how I responded in a crisis
Yeah.
and presented myself to the world
Yeah.
is how I would always want to do it. And the other time was when I got clapped off the floor. That was special.
Yeah.
It wasn't scripted. Nobody was there taking videos.
Right.
I just, you know, it was a short-term thing. I had only told the firm a few weeks before.
Yeah.
And I was going to work with my eldest son, who was co-founder with his best friend Adam in the software company. And I got up and I left and I said, you know, shook everybody's hand because that's what you do. My dad would come out of his grave if I didn't.
Yeah.
And you know, they all stood up and clapped me off the floor.
That's
and it was
amazing.
special.
Tony, I was going to ask why now, but maybe you just answered it. Is it because of the venture that your son is doing?
So I've been on the board of my son's business and that he co-founded with his best friend Adam. My other two sons work there. So there's a picture in our deck. It's got the four best friends and brothers. I call them my associate sons.
Yeah.
Had a farm stand. I built them a farm stand when they were like 10 years old. Put a cash register on it. You know, I'll show you the picture. And in it is Mike, Adam, Tim, and Alec. And in this picture, they're doing then what they're doing today.
It's incredible.
To help the healthcare industry, the businesses, and the patients they serve. It hasn't changed for even a moment. But it's not that, Mike. That's not the reason I made the decision. Why now? Because it's a fast growth company, and I don't think I'll ever get an opportunity to work at a company like that again. And it is so exciting to do it.
Love that. Love that. So tell us what the company does.
It's basically
We sell Ozempic.
We were the first ones to do it.
No.
Tell us-
It's a vertical SaaS company in the health tech space. Right now, our primary target audience is physical therapy, so it runs the business of physical therapy. So the mission is to create
Software for physical therapists.
Correct. It runs the
Okay.
whole business, soup to
Okay.
nuts. And the whole mission is to create extraordinary outcomes for healthcare businesses and, most importantly, the patients they serve. My son started it, or came up with the original idea because he got hurt. And when he got hurt, my brother did the surgery. He's an orthopedic surgeon. Did the surgery. He FaceTimed my son, Mike. My son, Mike, you know, moved his arm like, "What's your range of motion?" And it was here when it should have been here.
Yeah.
And my brother got upset and said, "You got to get a new therapist." And Mike said, "How am I supposed to know?"
Yeah.
And so there was the origination of the idea. So it's really kind of it's something that was built since 2017.
So how do they treat you within the startup? Because I'm guessing you're the oldest player on the team by a couple of years.
Well, the CEO, Ray
Right.
Balietico's CEO, he's
Okay.
my age.
He's
We
your age.
coached the
Okay.
kids. So this is the way it looked. We were coaching the kids when they were young.
Yeah.
And we sat on, we were coaching baseball. They weren't really paying attention in the outfield. We weren't in the dad's club
Yeah.
of the coaches. So they gave us, you know, we had our team. They're all out there playing, and this is Ray and I, you know, sitting there on a bucket filled with baseballs. Right.
Right.
So-
Right. I know the feeling.
So Ray and
did
I
it
are
too.
the oldest, but it's such a vibrant and exciting, and it's like when you come in here, people are milling around. They're thinking of what they can do. They're trying to create business. They're innovative, new ideas. It's the excitement of a growth business
Yeah.
that really attracted me because I was part of it as a member of the board since the day one,
So how long have you been away full day to day from Canaccord?
June 1.
Okay.
So about 3 months.
Are you able to step away from the screen? Like, do you still
Yeah.
check the stock market every day?
I check it every day. I don't check it every 5 minutes of
Okay.
every day, which is what we do.
So are you just managing your own money, or do you manage money for others in your family? Do you
No.
have bigger responsibilities?
No, I let them do. I made a decision a long time ago, Joe. My kids are smart enough to manage their own life. They don't need me to do it. Now, when they call on me to be a guide, I'll be their guide.
Mhm.
But I have a wealth manager. It's like the lawyer that represents himself has a fool for a client.
I won't
The
manage.
strategist
I won't
that
manage money
manages
for a family.
I won't manage money for me.
It's thankless.
Oh yeah,
I won't
totally.
manage money for me because
Yeah.
I don't. It's not what I do.
Yeah.
I advise institutional investors on how to allocate capital. That's not, hey, I think I'll buy 400 shares of Microsoft today. And if I did, you should sell it. Right? Like that, I'm not great at that, so I try to avoid it. Really.
So you still are tethered to a communications, like it's not as if I have a friend who's about to retire and she was telling me that she is this big job at a Fortune 500 company. And she said, I'm so looking forward to the day where I turn in my work phone, that I just feel exhausted from the amount of incoming. And how is your life today in a small, fast growth business different than being in a client business?
The incoming is the same, and I view the people that I represent as clients anyway. I always do. So it really hasn't changed that much. The stress level of being the front face all the time has changed, and that's nice. I like working for my kids and the rest of the employees at the firm and the clients we serve. I like that. Instead of always being, the guy out front, the face on TV or the radio. So that it's just honestly, Jill, it's a different kind of stress. It's not, it's still there. But, my family and friends would start laughing if you said that I was ever going to be the guy sitting on a couch or playing golf every day. I've gone from triple type A to double type A. Let's go.
Okay.
I will,
You're getting there.
You're downshifting, but
exactly.
you're not drastically.
Not exactly on the off
Listen,
ramp.
there's no other game. There's the A game that I like to play.
Yeah.
I can't sit there and watch other people play it. I'm a sports enthusiast because yes, I like to watch it, but I like to play it.
Yeah.
What's your sport?
Right. All of them. Skiing, golf, anything. We do anything.
Yeah.
I like to say the Dwyer family, we're good at all sports and great at none.
Okay.
Right.
Good-
So
good
I
enough.
don't even mean to say that's arrogant. We're not good at all sports, but we like to play all
So
sports.
on behalf of all of Compound Nation, everyone watching, everyone listening, I just want to say thank you so much for everything you've done for the investing community, for Wall Street, and we wish you well. We wish you nothing but an IPO in your future, and we'll get you back at that exchange before you know it.
Or
So,
before it
Josh,
closes.
it would be so arrogant of me to not mention
yeah.
how grateful I am for the people along the way that helped me, from the original, strategy group at Prudential and Larry Wachtel, to you, to Mike, now Jill, to the people along the way.
Barry
and
loves
most
you.
importantly, my associate I had, Mike Welch, was with me he's now the market analyst and strategist at Canaccord. He was with me literally for, I think, 20 years
Okay.
as my right-hand man.
Oh, they gave him the job?
Yeah.
Oh, very cool.
Yeah. So, and you know what? They didn't give it to him. He earned it.
That's right.
We earn it. I always said to management, if you can find somebody that does it better than me, get them. I'm
Yeah.
good. I'll step aside happily.
Yeah.
Right. And I think that's.
Did they call Belsky right after you said that, or what was the
I'll
reaction?
challenge you on that. but I know I'm taking a lot of time with this, but it's so important to be gracious to the people that help me. I could have never done it without them.
Well, that's certainly a sentiment that I agree with. Let's do some stock market stuff. What do you guys think? Sounds good?
Let's rock.
Let's
All
roll.
right, let's go.
I've only looked at it once today, though, Mike.
Okay.
All right. So Ben Carlson, our colleague Ben Carlson, put up a piece on September 1st called 31 Years of Stock Market Returns. And we have a graphic. And I know that this is, Michael, you mentioned this was a dimensional funds. They have this in a lot of their literature. I guess I didn't remember that they have that. They had a big chart
They had a
book. filled with
giant
these.
book, and it was all these charts.
So I didn't remember it. So when I first saw this, I just said, I've never really seen the data like this.
It's great.
And of course I have, but I didn't remember. Anyway, what we're looking at here, and for those of you listening, you can go to a Wealth of Common Sense and find this very easily. But we're looking at, basically, you can trace along the top axis any year. So it starts at 1993
Yeah.
up through 2023. So you could trace any year, and then on the y-axis going down on the left side, you have a number of years. And you could put your finger anywhere, and it will tell you what that number of years return was, annualized, from whatever year that you pick. So, like as an example, there's not a lot of red on this chart, which I think speaks to this really big idea that, for the most part, it's really hard to pick a bad time to invest. I think that was like one of the main points. Okay, you can pick a bad time to invest, but it's really hard to do. Even if that's the thing that you're most worried about. But then the second thing is it's really extraordinary how when you get down to this bottom left corner, all the numbers are the same. It's 10%, 11%, meaning the number of years as you get down to 25 years, 26 years, 27 years, virtually from any year that you start, the long-term returns annualized, they kind of default back to this 10 or 11%. Now, there's a couple of things we heard in response to this. Can you guess?
Oh, well, yeah, wouldn't it be better if I didn't have to be in those
Now
years?
show Japan.
No, now show Japan. No,
The train's never late.
why isn't this inflation adjusted?
Right.
To which I responded, because you're ugly. But that's the one that you get.
Yeah.
Really, you usually get that from other financial advisors
Yeah.
who are very tactical, and or use a lot of commodities or like a lot of non-correlated strategies because they don't want this to be true. It's a better story that they are more important than what the market does. So, all right, so you hear a lot about that. The other thing that we got was, so just own stocks through the worst markets. I'm not saying that. The chart is saying that.
But also, I mean, it's a little bit of you protect the turf on which you've been grown, you've been sowing your seeds, right? And I think that especially for a profession,
as a professional.
Yeah, these
Yes.
professionals, I think what they're trying to sort of say is like, well, what you're saying is I don't need to exist. And that's not what we're saying.
So they're taking it that way.
Yeah,
and
but
I
that's
get, and I get that.
but that's not what we're just saying is, isn't it remarkable that if you hold things for 10 years, basically, you're going to be fine.
Well, let's button it down to an even more practical way. If the equal weighted S&P 500 is bumping up against its all-time high, as is the S&P 500 and every other index, right? That means it never, ever, unless if you could hold for a certain amount of time, it never made sense to sell. It's where you're more aggressive and when you add.
Yeah.
Like in the crash of 87, if you bought before the crash of 87, that was a great trade today,
Yeah.
right?
It was probably a great
all-
trade a year later.
Yeah,
actually.
Yeah,
everything is if you give
but
it enough time.
I
Yeah,
like that.
exactly.
I like
That's
that.
the point.
I like that heuristic. So when you get to 11 years, there's no more red.
Yeah,
Yeah.
it's amazing. That's what's amazing
So
to me.
once you're at an 11-year holding period, it has never been a bad decision to have bought stocks. 11 years is a long
Well, how
time.
about Ben's post, Bob, the world's worst market timer?
Yeah.
Ben Carlson did a post that shows what happens if this person had $100,000 to invest or something like that, and he invested in 1974 or 73, 87, 99, and then again in 2006. He only invested his money at major market peaks, and he still compounded at whatever, 8% a year for time.
Exactly.
Even if you're the worst market timer, if you don't f it up, if you don't get scared and do something rash that you're going to regret, you'll be okay. Just
So
take
here,
time.
but here's the thing about that, though. If you're a professional,
You
you don't get bailed out because
Yeah.
you're the person that told somebody to buy stocks the day before 1987. Like if you're an individual, you can live through it easier than if you're the person that's telling other people when to buy.
But you know what I found since then? If you remember all the famous people throughout the history of market crashes, those people generally have a pretty tough time after that major.
Yeah, what happened to Elaine Gazzarelli?
Or anybody,
Barry,
Meredith Whitney,
Paulson, all of the heroes from the GFC, they never turned.
Noriel.
Rubini.
Yeah.
It's so when you my reputation, I think, is to be the biggest bull on Wall Street was my moniker for a long time.
Tony the Bull.
Because it was. It doesn't make sense to sell unless you have if you're somebody sitting at home, and Jill, this is your strength. But if you're somebody sitting at home and you got 2 college educations in 3 years, it's a different decision than an endowment fund.
Totally.
Yeah,
and
right.
like and like when people say, "Oh, invest like Warren Buffett." He has no
Forever.
end. There's like but we had a guy who called up the podcast and he's got $3 million in his brokerage account, 2.7 million of which is in Apple stock. And he's so scared to sell because he says, everybody I ever worked with at Apple who sold regrets it. I said, but you're telling me you're going to go buy a new house.
He's an Apple employee?
Yeah, he was.
Yeah.
And he said, but he wanted to go buy a house. And he's like, I'm going to get a loan for it. But what? You're
Scared to sell.
He's
It's amazing.
scared to sell.
I get it.
And he said very, very clearly, I understand buy and hold. No one ever taught me about when to sell. And I said, well, it's not a when, but
It's if you need to.
you need to, and that's
Like,
okay.
If you're somebody that your parents need to go to nursing care and you're going to have to fund it, and you're long the Russell 2000, you got to think about that. Like it's to me, we complicate something that has some common sense to it. It's what do I need? Why do I need it? And how am I going to get it?
And when am I going to need
And when,
it?
right.
Well,
and,
see,
and that's the key question.
Yeah.
So one other thing. So the two worst times to buy based on this chart. John, you want to throw that back up? I mean, we know this information. 2000 and 2000, the year 2000, you were negative for 5 years.
Right.
That's a big deal.
It's a long time.
That's
That's
really
forever.
And I was in the business at that time. The thing though that's worth pointing out is almost nobody took an entire cash lump sum, put it in the market in the year 2000. Almost nobody. Now you might have bought things in 2000, but you probably also bought things in 97 and in 2002.
Right.
So it's rare that somebody is going to take this lump sum and just drop it into the market right at the top. So, but it took 5 years, and that's tough. The second worst time looks like it was 2008. So it took 4 years. Now 4 years is also hard, but like, is that the end of the world? I mean, it's not great.
Well, if you're a
But
long-term investor, what's your time horizon? When we say long-term investor, what would you say? 10 years?
I would
15?
say for institutions, yeah.
Right?
Yeah.
So if that's long-term, that's fine. And if you're a short-term investor and you had 100% of your money in stocks, shame on you.
Yeah.
Right?
So let's do the visual. There's red and there's green, right? So 2008, 4 years later, you're down minus 2%, correct?
Yeah.
What are you with interest rates? Like, what was the market?
Well, let's think about that. In 2008,
So, like-
rates were zero, basically.
Right. So the spread that you're getting isn't so crazy. It's red and it's popping at you,
Right.
but it's really not that different than sitting in cash.
Mhm.
Like, let's say you were in cash the whole time. You're not, you're getting more than zero, but not by a lot.
The last thing I want to point to here, that last red box in 2022.
Yeah.
So if you had bought in January of 2022, and that was the only time you ever bought, and you just put a lump sum, you put $1 million into the market,
Mm-hmm.
you are absolutely hating life by December.
Yes.
But look, a year later, you're up 2%. So you had to make it through 1 year. And 2022 was a horrible year. Like
It's hard though. You turn on the TV, people are squawking at you about how the end of the world is going to come. You'll get the commercial. There's always a commercial of like Armageddon 2020, Armageddon 2021, Armageddon 2022.
Well, so I think that's the part of this chart that's triggering to people is it makes it look like there's no risk and that it's easy and it's anything but. We know that.
Yeah,
Yeah.
it's like unfortunately, what I found one of the lessons in my career is the hardest thing to do is to tell somebody to be aggressive when it's looking the worst.
Yeah. What are you, an idiot? You don't see the risks?
Yeah.
Right. Like, and you always see the risk,
Yeah.
and you always know if I'm doing my job right as a chief market strategist, by definition, I have to be wrong first, or I'm hurting you. Other
Yeah.
than going on CNBC or one of the channels and saying, "Oh, I was right," which I
Yeah.
would never do. What good is it to be right away? Because nobody's going to buy it.
Tony, does 2024 feel like through the end of August, does it feel like the fifth best year since 1990? Like, does it feel as good as the data suggests it
And
is?
that's where I'd say in what measurement?
No,
like,
I'm saying the S&P 500.
Yeah, I know the S&P 500, but one of the things I can very openly say is I'm not an expert in 7 stocks.
Yeah.
Again, if you remember the chart I used to publish that had top 10 stocks percent of the S&P 500 were currently, I think it was 38% or
Yeah.
some number like that. That means you're an 8 stock strategist.
Yeah.
And I'm not that smart, right? So you're not a macro strategist at that point. You're a stock strategist for a very small number of stocks. So if you do an equal weighted or the Russell, there's times this year where it's been flat, down
Yeah.
for the year. And that's why I think there's so much frustration on Wall Street in the institutional community or even individual community, because unless you talk about it every day, you levering up those names,
Right.
there's no way you're outperforming.
So, Tony, you've had a storied career, so almost 4
Thank you.
decades. And I'm wondering, in those years, if you can really think back, I know that the seminal events, the 1987s, the 2000s, they're important. Were there years that just absolutely shocked you? Were there years where you said, I cannot believe that happened? And if so, what were those?
To the downside or upside?
Either one.
I would
Either
say
way.
to the upside. I
2023 is that for me.
2023 and 2020, even 2024. But again, which market are we
Well, I'm
talking
just saying,
about?
John,
like-
pop that chart. Pop that chart. So
Yeah,
we can,
I got 23 wrong. I mean, I would not have expected.
Most people
number
did.
one, expected a recession. Number two, I didn't think the market would rally to the degree.
take a look at this. So to Michael's point, this is year to date 2024. They're showing the
amazing.
calendar year since 1990 where the S&P matched or exceeded. These are the only years as good as this year through August.
Isn't it interesting? 1995 and 1997, two non-recession years were two of them as well.
So 91, we were up 19.7% through
And
this
that's coming
period.
out of a bear market.
Yeah.
95, you're up 22% through August.
It was
90
a financial crisis bear market too. It was S&L crisis.
Yes.
Right.
97, you're up 21.5%. 2021, well, that didn't go well. You're up 20%. And then this year, you're up 18.4%. It almost seems inconceivable.
So, I mean, but so far, Josh, so let's say something goes bonkers in the next 3 months, right? That chart changes. That's why we're famous for creating chart. And you're not doing this. You're just highlighting.
No, shame
a
on
point.
Belsky.
No, but here's the point.
This is Brian's chart.
But
It's a great chart, though.
2024 disappears.
Yeah.
Yes.
Well, we don't know.
If the market all of a
course.
sudden drops 3% by the year end.
Let's take a look
Well,
at
so
that.
the point of this chart from Belsky is that in the back half of the year, in the last 4 months of the year, it's been positive the last 4 times that we were up this much. But also on the bottom, Brian shows that even though it's been higher the last 4 times, there's also been drawdowns, of course, as there
Yeah.
always are.
Brian does a great job, by the way. He's a good friend of mine. It's
shout
a
out to
great
Brian.
chart.
So I think the message of this chart is that things will go bonkers. It's like
Yeah.
it's not just expected, it's common.
It's every chart,
That's right.
right? And the question is, do you have a person advising you, to Jill's question to me earlier, or you're enough intestinal fortitude to believe when you're looking wrong that you're not?
Well, I think that's, you guys make this point all the time, that I think that the interesting thing that we found out is that the younger generation is trained to not be as reactive as we thought they would be. We thought they'd be twitchy,
No,
and these
they're not
meme stock
afraid.
people, they seem not afraid, and they also are very much looking to opportunities. And I think that that is a different generation.
Jill,
So
they're not
I-
losing as much though. They
Can I
don't
tell
have
you
as
who the
much
best
invested.
investment-
Agreed.
The
Yeah.
best investor I've ever met so far? My son, Mike.
Okay.
He puts every 2 weeks a certain percentage of his money into an index, and he's done it since he started working. He's never worried about whether that we're going to go into a recession or anything. He's just doing it methodically as prescribed.
Yep.
And it's compounded way more than the vast
Would you
majority
agree
of professionals
that's what
that I know.
That's what most regular people, not people working on Wall Street, with their 401ks, they don't even realize it, but they set up an allocation
Yeah.
in 1998. And if they're still at the same company, they never changed it. It's 25 years later. They've had huge ups and huge downs. But like Fidelity said, they have about 500,000 401k accounts that are $1 million or
And it's
more.
not, it's not just Josh's point. It's not just young investors. Like Vanguard never has outflows,
Yeah.
ever.
Yeah.
So all right. So I think the conclusion though from Ben's chart and Belsky's chart is not bad things can't happen. It's that they're definitely going to happen. But even still, it's really hard to pinpoint a quote unquote bad time to invest, especially if we're talking about for longer than 10 years.
Well, one thing that we didn't mention in terms of the stock market is that these are actual companies. They're businesses, and they're really fucking good at growing their earnings per share over time. And
better
investors
than ever.
investors
actually.
are rewarded for the businesses growing. It's very simple.
Yeah, I mean, you lose that thread sometimes because you're, I'm in the index.
Right.
I'm in the market. It's not like a person. It's it,
No,
it is
you own a piece of Apple.
Exactly
Like
right.
actually.
exactly.
Well, isn't that what the capitalism in the stock market was formed for? So that an average person can become a partner in a
No,
company?
it's to sell gold on Josh's shows.
Hey, all right. Tomorrow we're gonna get the August non-farm payrolls report. Tony, these were probably like Super Bowls for you.
You probably don't miss that part
Did
of
you
it.
miss that part? Like,
What?
what's the jobs?
happening?
What's the jobs number?
Can I tell you something? A year and a half ago, maybe 2 years ago, I wrote a piece about the data. People have now picked up on it. The Fed talks more about it. Tomorrow's number is ridiculous to use. I, for the love of God, I begged my clients to not look at these numbers and react to them.
Why?
Because they are so revised.
Yeah,
Prior
2
to
more
the
times.
pandemic, there's some, the establishment survey, which we're going to get tomorrow. It's the number of jobs that were created. It comes from the establishment survey. Pre-pandemic, it was a median 70% of companies. So they send out the survey to Ritholtz and Company. You tell them how many people you hired, how many people you fired. You answer a couple questions, right? Before the pandemic, 70% of the companies each month sent that back in to be in the initial report. So it's called the initiation survey rate. You can Google it and it'll come up. The Fed tracks it. The current data is it's 28%, I think, respond.
That's terrible.
Maybe it's 38%.
What do you think accounts for that fall off?
Because companies are doing their business versus responding to the government. So that's the establishment survey. How about the household survey with the unemployment rate?
You're looking for a job? That's what you have to answer.
Well,
Actively?
Here's how they ask you that question, still the same way. 2 ways. They either knock on your door and ask you to do an interview,
Well,
or
we've never answered a door knock in 15 years.
well,
in my
we
house.
had a BMW in the mean streets of Bergen County where I live.
Yeah.
Somebody came in and stole my wife's BMW while we were inside having pizza.
Right.
The odds of us answering the door to
Zero.
when somebody's at zero.
Yeah.
So that's how they do it. It comes from the Census Bureau, or they call your landline.
Right. So who's picking that up?
So I think if I ask for comments on the podcast, please comment if you have a landline. You get like 2.
Yeah.
I'm old and I don't have a landline.
Well, that's the problem with owner's equivalent rent.
Totally.
So who's answering the question?
But let me ask you something, Tony. So in that respect, so we have the initial will come out tomorrow, then there'll be 2 revisions. And do you think once we get to that 3rd revision that's the actual number?
Wait a minute.
It's not because then they revise it. So think of the 800,000 plus that we just revised out. That came
March.
well after the second revision.
But they sync it with the state unemployment. Each state is collecting unemployment data because they're paying out the claims.
You would think they'd be out. It's like the ADP report. You'd think they just count it. It's ADP.
I don't understand.
How is there a revision?
I don't understand why we're still estimating something that clearly there's a solution. We can absolutely get real-time payroll data.
Right.
I don't understand it at all.
It's disheartening because think about how the investors that got hurt by the market volatility, again, going back to who can you help? That's why please don't react to the number no matter how many screaming voices come on TV. It is a wrong number.
But what if the stock market falls? And then you should react.
But is it direction? Is
should
there
always buy when
information
it
in it?
falls.
Is it directionally? It's rare that you would say, "Oh no, there were 400,000 people filing for unemployment," and then the real number turns out, "Oh no, it was only 50,000." Like that's not the kind of thing that happens in a month. So directionally, it might have some value just to understand.
I don't know if you remember the beginning of last year, you had a revision of like 100,000 something. Like each month now, the revisions are in the hundreds of thousands. Remember, 70% of the companies did it in enough time for that first report is what creates the market response.
So when
Nobody cares about
so
the
when I go on
revisions.
the air tomorrow morning, theoretically, if my hit does not get
You
killed.
say, "Tony told me this is all bullshit," but anyway,
Exactly
here's
what I want to say.
here's the
I was
number.
talking to a
I did not use those words.
Okay, I use those words.
No, but it was interesting is that so a month ago when we had the weaker than expected data, and then we had the unwind of the carry trade, blah blah blah, whatever. I went on the air on Monday morning, woken up at 2:00 in the morning to prepare for my 7 a.m. hit. No, unnecessary. Producers, The show doesn't start till 7. You don't need to call me at 2.
How much of that is doing your hair and makeup?
I was
5
out
hours
east.
sounds
I
about-
was out east. I had to do my own.
Oh my
it was
God.
Mike and I can
unbelievable.
wake up 5 minutes in front.
Yeah, I mean, it was crazy. I literally picked up the phone. I said, "I'll talk to you in 2 hours. I'll be on the air. Don't worry." But I just needed some time.
Yeah.
So, but when I went on the air, everyone said, "You seem so calm." I said, "Well, the market is selling off. It's not selling off by 22%, which is always my bogey, so there was a weaker than expected report. It's the first one of 3. What's everyone freaking out about?"
Well, because we always look at a negative surprise as being not the end in and of itself, but the start of something.
But wait a minute. If
Of
we get a
course.
negative surprise tomorrow, let's just say, they think
Well,
it's
that
going
would
to
be the second in a row.
But let's say it's 160 or 170, okay? Then that's right. That's what we expect. Let's say the 114 gets revised lower from the previous month, and let's say we get 100,000. You don't tell me that everyone's going to be like, Fed's going to half. I got to buy
but they'll
stocks.
also say you have margin risk because you're going to have lower revenues.
This is the question I wanted to ask you guys. What would get a worse reaction from the stock market? A red hot August jobs number that calls into question, rate cuts for the rest of the year, or a big miss to the downside? I think it's the big miss.
Big miss.
I think it's a
Because
big miss.
we know they're cutting. It would be the big miss.
So let me give you Bank of America's forecast. We expect non-farm payrolls to rise by 200,000 in August after coming in at 114,000 in July. Public sector should rise 30,000 because of local employment. Private should be 170. Education and healthcare should remain robust. We look for unemployment rate and labor force participation to decline a tenth each to 4.2% unemployment, 62.6% participation. We think average hourly earnings and average weekly hours will both rise by a tenth. So that's kind of like a baseline. If it's anywhere in that vicinity, Tony, to your point, I think most people that are not algorithms that are programmed to automatically trade will just say, okay,
Yeah.
close enough. Like, I don't know that most people are ready
Well,
to jump off a bridge.
Based on what happened on that day where Jill talked about that big down day
Yeah.
and the weaker economic data, that's the description of what's going to happen.
By the way,
that's
not bad.
the fear.
By the way, not bad. If we hit this blue line on the bottom,
Yeah.
I mean,
It's in the zone, but ultimately the market weakness of late has been even though I'm not watching it as closely as I did, it's been fueled by recession fears.
Yeah.
So,
But
if-
where's the recession indicator? I mean, like last month, a friend of mine texted me as soon as the report came out. He used to run a big bond portfolio for the government, actually. And he says, oh my God, we now have had 4 or 5 consecutive months of increasing unemployment rate. That is always associated with a recession. How much do you guys think that, which we never like to say, as you guys always say, this time is different, but this is a weird time. This is a weird time. So
Can I quote myself?
Yes, please.
For the
That's what I
second
love.
ti- for the
That's
se- for
I
the-
love for you.
I was
Joe.
about to, but you should.
So I say that the 12 most dangerous words in investing are this time is different. Oh, no, sorry. The 4 most dangerous words. Oh, my God, I f***ed it up. The 4 most, you know what I'm trying to say.
Wait, edit that
Oh, my
out.
God.
Edit
Michael
that out.
Batnick, ladies,
Wait,
do not edit that out.
take 2. Take 2.
You know what I was trying to say.
Duncan, you keep your hand off
You
that
know what I was
button.
trying to say. But I think that we're doing it right now. We always do. Investors spend so much time talking about the risks and what we're worried about. We never talk about the upside risk or what can go right. And Bill Miller has a great quote, which I won't f up because I'm going to read it word for word. I think he was talking to Barron's. He was asked, they asked him, like, what do you worry about? And here's what he said. When I'm asked what I worry about in the market, the answer is usually nothing, because everyone else in the market seems to spend an inordinate amount of time worrying. And so all of the relevant worries seem to be covered. And that's such a great attitude and philosophy, not to be ignorant of the risk. Of course, we're all worried. We're all worried about the next shoe to drop and what can go wrong. But the market does it for you. Like it doesn't.
Like, assume there's a lot of worry already.
Yeah, it's no good doing it
Unfortunately,
for yourself.
In our job, it comes down to it's about ego. Were you right or were you wrong? Because we all know the numbers. You had the chart up. You can't debate the data. So what's the problem? And the problem typically is when somebody can say you were wrong.
Yeah. Well, so I think one of the things that you get over that really quickly is just being around long enough to know for a fact that you're going to be wrong.
Yeah.
All right. This was
clear.
surprising to me. I didn't even really truly understand the extent of this. It's a Wall Street Journal piece basically saying we've had this historic influx of migrants. They say it saved the labor market. I would also say that it helped defeat inflation. I don't think a lot of people were expecting this to be the case. But let me read this to you, and I want to hear your reaction. Since the end, this is the Journal. Since the end of 2020, and the Journal is not like a big fan of immigration, unless it helps companies, bring down labor costs. Okay, since the end of 2020, more than 9 million people have migrated to the U.S. after subtracting those who left, coming both legally and illegally, according to the CBO. That's nearly as many as the number that came in the previous decade. Immigration has lifted U.S. population growth to almost 1.2% a year, the highest since the 1990s. Without it, the U.S. population would be growing 0.2% a year because of declining birth rates and would begin shrinking around, I lost it. Sorry. Where was I? No, here. Oh, begin shrinking around 2040. Okay, but I want to do the chart. So like this is, now, if you're not a fan of immigration, then you're not a fan of whatever Biden's been doing for the last couple of years, because it's as plain as day. We had this tamped down immigration, both legal and illegal, during the pandemic.
Right. No one's moving anywhere.
Nobody's going anywhere. And then it just absolutely exploded starting in 2022.
Yeah. Remember when everyone's like, I can't find help. And then all of a sudden you have 9 million people here and it solves your problem.
I
Right.
just want to remind everybody, we just spent how much time talking about how great the government is at counting.
Yeah.
And all of a sudden, these numbers are right. So I would caution
Oh,
against that as
okay.
well.
So do you think they're over or understated if you had to guess?
If I had to guess, I have no idea. That's why I have no idea. So I could give an opinion on it, and it would be a wild
What about
guess.
these stats? This is the point the journal is making. The reason why the fight against inflation looks like it's been successful. Recent migrants are younger and more likely to be of working age than U.S.-born Americans. Of foreigners who've arrived since 2020, 78% are between the ages of 16 and 64, compared with 60% of people born in the U.S. They also say that they're more likely to be in the labor force. Of recent immigrants aged 16 or older, 68%, the participation rate, are either working or looking for a job. Only 62% of native-born Americans are in the labor force. So that's saying it's like 5 million people, or equal to 3% of the labor force, are basically new workers. I have to believe that that's played
Even if it's
a
not
role.
right, even if it's not the extent, either way,
Mhm.
I and if you talk, we do tons of stories at CBS about small business owners,
Yeah.
and then the producers are smart. They go back, they track, they say, "Hey, what has happened since?" Everybody who is ever on the air, and it's just kind of a tiny little database. It's nothing like huge, but anecdotally, what we learn is that people are like, "Yeah, I got to find some workers," and that really helped a lot. And for the ones who are actually here, perhaps not in the most legal of fashions, they can pay them under the table, and that really works well for them.
But it ultimately, it's still a cycle. So you have a huge amount of influx.
Mhm.
So at the company, it's hard to find software engineers. All of a sudden, it's not as hard to find software engineers. And then a lot of software engineers are available, or salespeople or whatever.
Mhm.
So that influx is there. So what? Now what?
Well, what it means is a hotel chain doesn't have a maid shortage. What it means is that
But they'll
quick service restaurants
But they'll eventually
aren't
have
paying
a
people
surplus.
$22 an hour anymore.
If you eventually respond to interest rates and the other factors that create human nature, recessions, you don't go from shortage to just right all the time.
Right.
You go from shortage to a good amount to a surplus. So we're making the assessment here at the valuations we're at and all the other fun stuff that it's going to be perfect. The pendulum's just going to sit there right at the right spot. We're going to have the right amount of workers, the right amount of inflation, the right Fed policy. I thought it was interesting that it was, I think, the last Fed meeting, the market went up huge right before it got crushed. So the Fed was high-fiving about how they got it right. And 2 days later, we're in recession fear for not just a 25 basis point cut, but an intermediate cut.
The Fed said we will do whatever it takes to support the labor market, and stocks love that.
Yeah.
And then, one thing that I would say though is, remember all the talk about when we were we were doing the show when we were deep into 2022 in the summer, and we were getting these 9% inflation prints, and the Fed was already raising rates, but not fast enough, and we were saying, like, you can't print more houses and you can't print more workers. Like, the Fed can print money, but what they can't do is print labor. Okay, fine. But 9 million migrants into the country in 2 years is almost like being able to print humans. So,
Joe, before I cut you off and then butchered my own quote, you were talking about this time is how different it is this time. And one of my big things over the years that I really feel strongly about is people spend way too much time trying to find a proper analog. And there really are never any great analogs for the current period of time.
you're
Not
like
just,
a truther with this stuff.
yeah,
Like,
I won't let it go. And not just today, but like, and I love all the data, all the historical data, that this time, that happens, that time. And it's fun to talk about. It gives us something to talk about, but it's not really useful.
You know, what I always think about, to Tony's earlier point, is that when you're thinking about the things that should be keeping you up at night, I was going to put this in the document and my day got away from me. But there was, I don't know if you guys saw this in the journal today, there was a big article about the amount of money people are spending on care for people to age in their homes.
Yeah.
It was an absolutely eye-opening and frightening article because people are spending not just rich people, middle income people who are forced to leave the labor force. People who say, oh, I would have been putting more money in my 401k, but I had to stop working because my mother got sick.
That's
and now
right.
I have to take care of her. And I moved in with her. So
Yeah.
to me, these are it's like a much better focus for people to consider, like, what are the big ticket items that are going to derail your own financial goals? I help my kids out too much. I have to help my parents. What's that going to do to me? And these are sort of it's kind of boring because, like, who does? Oh yeah, I really want to talk about how horrible it's going to be to
boring.
get old and run out of money.
But you know, personal finance is more important than the portfolio.
True, but I also think the portfolio, like the hyper focus, the amount of energy that we're putting on the portfolio and even the economy,
Versus what it's there to pay for.
yeah,
Yeah.
exactly. That's the
That's right.
disconnect. It always feels misplaced.
Well, that's why we have a job.
How much do you hate the jolts? A lot of people hate the jolts.
So the JOLTS survey, going back to
John?
the initiation survey, right?
Yeah.
The low it got was 8% of respondents.
Good joke.
When the Fed started talking about JOLTS, 8.5%. If you go to that data sheet that I talked about, the initiation survey rate on the BLS, 8.5%, Josh.
So nobody.
That was, I believe, the month surrounding when Chair Powell started mentioning it. It's all the way up into the 20s and 30s now.
Okay.
So it's
Also, like
bad data. It's bad data. Not
it-
bad data. It's inaccurate. data.
It's inaccurate. So jolts surprised to the downside in July, came in negative 427,000. This is another thing that I learned to tune out. They were saying, like, there's 10 available jobs for every person that wants a
Yeah,
job right
baloney.
now. Bullshit. And we called bullshit in real time. I didn't realize the extent of the bullshit when you see how fast it's now gone negative. And I just don't believe these quit rates. I don't believe the commentary attached to the quit rates. I think it's maybe interesting, but I don't think it's helpful. What do you think?
I don't think it's helpful.
Okay.
Yeah, I don't think so either. And it's a 1 month lag also, which is also weird because
Let-
it's for the previous month, not the month we're going to get for tomorrow. So this is July data that we
Yeah.
just got earlier this week. We're going to get August data tomorrow.
Chart Kid Matt did this really great visualization of the interest rate cuts expected between now and March of 2026. And of course, he's using market data, which changes all the time because people are placing bets, changing their bets. Does this trajectory look like it's in the realm of
Why are you
possibility to you?
laughing?
Go back to March of 2022, and you had 75 basis points priced into the market as the peak rate. So looking at
And here
this
we are at
chart,
525.
and the idea
Yeah.
that this is going to be right is
It is
Right.
comical.
Right.
It's
Yeah.
Well,
truly.
it's
pretty.
It's too smooth.
Yeah.
So when I used to talk about before I went gratefully to work at my family and kids company, I talked about how the market is going to be surprised at how rapidly the Fed will cut rates.
Mm.
They've never got it right, even close. And we're making the bet that it's exactly right forever,
Yeah.
right? And it looked like an idiot call that they were going to cut by 200 basis points. If you get a tough employment report, we had an intermeeting cut on the idea of the first data point they might have a recession because the market got blasted. Imagine if you had a negative payroll print, because there will be a negative payroll print.
Oh,
yeah.
it always happens.
Right. And all of a sudden, we're going to be like, the Fed will be like,
So
"We've
negative
got this."
payroll print meaning year over year we lose net jobs.
Yeah.
Yeah, they're not going to do a 25 basis point cut after that.
No.
I mean, you
Going-
got an emergency when there might be 150.
I'm 100% with you on that.
Right,
I
so
think there.
Please,
I don't know when that's coming, but I think if and when it comes, the trajectory being represented here, you could throw it out.
Yeah.
I mean, with all the humility of somebody that's been wrong for a lot.
Next chart
over
on
my
this,
career,
John.
You just can't look at that stuff.
So this is actual. We're at the black line, and this is what's implied. Again, these are market. These are market based. You know, this isn't strategists or economists. This is just where the market is. But they have priced in now 3% by January of 2027.
Now, what do you think about that? Do you think that that's where we end? I mean, I don't even know how
What's
we
the
get there.
terminal low
Where do we
for
think?
the cycle of rates? If there's no financial crisis, because then of course we're going back to zero.
Immediately.
Well, and a lot, right.
Maybe,
we're cutting by 525
500
basis
points right now.
We're
What-
suspending the Fed
But do you
funds
think
rate.
the Fed in their mind? I know they're data dependent, blah blah blah. Do you think in their mind they have an idea of where the cutting cycle might
Yeah, and then
have
they'll
to
change it next month.
Okay.
You know.
All right. So, but this is where we are now. Do you think
Yeah.
directionally it's
I
like
think directionally it's right. I think it'll probably be that 2026 number. If you get to 3%, it'll probably be a little bit faster than, by 2027.
So we made it almost an hour without talking about Nvidia, but we got to go there because Michael Sembelis wrote an incredible piece. And there's some charts in there that I want to share that are really, really important to understand the current dynamics of the stock market. So first of all, we're going to start with the chart showing he breaks up the S&P 500 into the top 20 companies, 21 through 100, 100 through 200, 200 through 300, and then 300 to the bottom 500. And he's showing the trailing 12-month performance. And we know that the top 20 are dominating because of the AI trade. But more importantly, look at the change in 2024 earnings estimates since June 2023. We've said over and over again, and it bears repeating, that the top 20 stocks, the AI trade really, really and truly saved the market. It's the only bucket of stocks that has had positive earnings estimates changes since 2023.
I can't find a time where if you look at top line growth slowing to the degree that it is on a year-over-year basis, where margins went up.
Yeah, it's
It's
unbelievable.
the kiss of death when.
But what is
because
that? It's productivity?
No, it's the top stocks. It's this chart.
That's it.
It's it because it's not productivity.
Okay.
It's literally
Sorry, I'll leave.
Now as a CFO of a great company,
Yeah.
you cannot cut your costs fast enough when you lose your revenues.
That's over.
Because you have payrolls and all the other things. So the death knell of margins is revenues. It's not higher costs. We always think, inflation. Yeah, it's not helpful. But ultimately, in a good inflation environment, they just raise the prices of the snowmobiles or ATVs.
Yep. But also when your revenue...
It's in this environment, Mike, it's so important. It is, I can't find a time where revenue has slowed. It's not dropped. Slowed to the degree, slowed from peak that it has now, where you actually saw the S&P 500 operating earnings margins go up.
But isn't the answer to that riddle we overhired in 21 and 22 and companies have right-sized their labor force? We had mass layoffs.
At the big ones, not at the
big
small
ones.
ones, or those earnings revisions wouldn't be happening. That's happening because your revenue's coming
is
down.
Is there a way out of this?
No.
Okay.
Lower rates won't help?
No. It works with a lag.
But eventually?
So this has to
So this
end.
guy, he gets off Wall Street and he turns bearish. Unbelievable.
There you go.
Bearish, but what is bearish? We talked about this earlier. Let's talk about that for a second. What creates the difference between a 1990 recession-based pullback or the great financial crisis?
Right.
Leverage?
Both leverage, and also the banking system is flush with cash. Private equity and venture is flush with cash. You go into a crisis like the great financial crisis because you have a need for money with no access to it. There's not a need for money right yet, but you have plenty of...
There's too much dry powder right now.
There's a lot of dry powder. So how can you make the case that you're at the GFC unless all of a sudden if the leverage unwinds?
We were joking around like 6 months ago. Somebody was talking about like commercial real estate's going to take the economy down. I'm like, did you read the Journal this morning? Goldman Sachs is launching a distressed real estate fund right now. If everyone is excited for the distress, you probably can't get the distress.
But I think you raise a really good point, which is, hey, you know what? Let's have a regular run-of-the-mill recession and let's have a little bit of a run-of-the-mill bear market. What would be so bad about that? And
a
it's
lot of stocks reflect it.
Exactly. And so if maybe we're there practically.
We're looking at the S&P 500. I know the Russell 2000's near and all that. But, I mean, there are a lot of stocks that discounted a recession already.
Yeah.
So the idea, I think we got to be very careful, Michael, about turning bearish or bearish.
You want to roll through one or two more of those?
I want to. We can go through all of them.
I will tell you
real
what I
quick.
said after 9/11. This is an extraordinary country with extraordinary companies and people that lead those companies. And most importantly, as I've seen at Prompt, work for those companies. Our employees are hustling. They're working hard, and I think that's true at most companies.
In a recession, even harder.
In a recession, even harder
Yeah.
because not because they have to, they want to. When
Yeah.
you work at good companies, they want to work hard, and that's what my experience is.
So the Mag 7 is spending more on CapEx and R&D than the entire rest of the large cap index combined. It's really astounding. And it
Just doesn't feel like that's sustainable, does it?
well, I
mean,
don't know.
I guess for a while.
Well, the good news is they're spending it on each other.
Yeah, exactly. It's not just
I don't
it's
know if
like
that makes you feel
it's like the
better or
rich get
worse.
richer.
So speaking of that, I think this chart is perhaps the chart of the century. It explains a lot. The largest 1% of U.S. corporations share of assets and revenues.
This is bananas to
It's
me.
unbelievable.
So wait, can we narrate this for the people listening? The assets of the largest 1% of corporations are 97% of the total,
Mm-hmm.
and the revenues of the largest 1% of U.S. corporations are over 80% of the total. And for context, in 1990, it was only 70% of revenue, and it looks like
60% of
or 90% of assets.
yeah.
But like just the idea of the rich getting richer
Mhm.
and companies that have cumulative advantage, and once you get big, it's easier to get even bigger. That's what you're seeing on that
Yep.
chart.
So this, talking about how historical comparisons are nonsense, I thought this was actually a really, really good one. Michael put the AI capital spending in context, and he shows the share of market-wide capital spending, and he plots Nvidia from 2020 to today and what expected it to be in 25 and 26 versus IBM's peak revenues and
1969.
in 1969 and Cisco, Lucent,
How funny
Nortel
is
peak
that?
revenues
Only
in
2 of
2000.
us were alive then.
Yeah, that's right.
So 69 was the all-time cap spend. But what was that? Trying to get to the moon or trying to beat Russia? What was
It's
going
like
on?
mainframe computers. That's like
Mainframe
really what it
computers.
was.
Yeah, that's what it
they were
was. That was
building.
the initiative. You had to have it in an entire building
Yeah.
to run,
It was huge.
half the speed of your watch now.
So the DOJ filed the suit against Nvidia.
No, we don't know. That's
What,
none
it's
of
an
that. None of that is
investigation?
true. None of that is
All right,
true.
whatever. They're doing something. What are they
didn't
doing?
Well, nobody. First of all,
It's an
nobody.
investigation.
Nobody
They didn't
filed a
file
suit.
anything.
There was talk in the media that a subpoena was sent to Nvidia.
No.
And then Nvidia came out and said, no, that's
It's
not
not
true.
a, it's so just because since my wife is in the regulatory relations space, what I can say is that every time.
By the way, we're the ultimate. I'm not a lawyer, but
exactly, I'm married to
I-
one.
nobody
I
should
saw a
ever
tweet.
finish that
Exactly.
sentence.
But
I know
to
a
be,
lawyer.
To be,
Yeah, yeah, I
to be
know a lawyer.
clear, so like all of these government organizations, all of these regulators open up investigations all the time. And we in the media breathlessly report on it. And I have to even say to people at work, like, okay, that's not like there's no filing. They're just saying we're investigating.
All right, so
We're
anyway,
checking
like I
checking
was
you out.
saying, Jensen Wang has been arrested.
So I just want to be careful with that.
So-
You better say you're kidding on that.
So there's a market share of data center GPUs based on 2023 revenue, and AMD has 3%. The others combined at 5%, and NVIDIA has 92%.
That's crazy.
I mean, it's unbelievable. But the fear is, heavy lies the crown, right?
Mm-hmm.
We know what happens when these companies get to the top spot. There's really nowhere else to go but down.
This is a great one.
So Michael shows what happens to these top stocks going back in history: General Motors, IBM, Altria, Cisco, GE.
this is what happens
Exxon.
after they get to the point
After
where they're
they
the
get
biggest.
to the number one spot, which is those gray bars.
Yeah.
They've all done really, really poorly, with the exception
Exception.
of one, Apple. Apple took the number one spot in 2011, 2012. And then Microsoft took it in 2000, crashed, and it took it back, and it's been okay. But these tech giants are really changing the nature.
Is NVIDIA Apple or is it Cisco?
Well, that's the question.
I think that's like a really big question.
So I think two things can be true that sound contradictory, but they're not. Cisco has earned the valuation that it is with the margins, the growth, the estimates ratcheting higher. And it's also true that due to its current valuation, it will probably disappoint at some point in the future. In fact, it will definitely disappoint at some point in the future, but it will probably have lower returns going forward than people are expecting based on valuations. Is that reasonable?
I don't like to, I can't comment on individual stocks. Like, so it'd be if I gave an answer, I'm going to turn it to Jill.
Oh, who
because-
knows?
yeah,
I mean,
Jill,
like,
tell us, give us your price target on NVIDIA.
I told you what I wanted you to do with your NVIDIA stock already. I gave you my best idea, which is gift it into a donor advised fund and be generous, support my ride. Obviously, you could do that. But
Okay.
but I mean, I think that people who don't.
You're going to get a huge check.
I can't
You know
wait.
that, right?
You're getting
It's-
you're getting the ask also. So it's pipe down over there.
sensing it. I'm feeling it.
No, but what
he's
I think,
going to pay more.
what I do think is that going back to that when I said this guy called because I don't know how to sell. If you're playing and you're having fun in your fun money account and
Yeah.
you've made a bunch of money in Nvidia, there's nothing wrong with saying, "Let me take some money off the table and let me see what else is out there."
Except if it goes from 106 to 200, there are people who just bought it at 80, and they'll say, "I can't believe I did that."
Okay,
Yeah.
but then you don't have to do the whole thing.
I'm saying that's why it's hard. That's why it's hard.
Here's
for
another
people.
lesson from 37 years of this game. That's wrong. I've sold too late. My problem in investing has not been selling too late. It's been selling too early.
Me too, always.
And it's not a comment on Nvidia. I disclaim that.
Yeah.
But I remember buying a 5-letter stock, at like 7, thinking at 4, and in 3 weeks I'm a hero at 7. Got to take the profit. Got to take.
Yeah.
When it got taken over at 50, I'm an idiot.
Yeah. But I mean,
Facebook's the only stock that I bought at the bottom. I bought it like literally at the bottom at $90, and I sold it I think at 180 or 200. It's at 517.
Right.
I mean, and you can do the other way, by the way, with all my colleagues at CBS who are playing that. Oh, it's going up. It's spiking to 90 and 100. I'm like, sell. And
what pieces of shit these media companies are? It's
you want to have a little moment about that?
No,
It is
no, we don't want to do that.
unbelievable.
I want to just touch on the election. I don't want to spend any time here really, or a lot of time here. But if you guys have a take or an opinion, Goldman Sachs very surprisingly came out and said U.S. GDP will actually take a hit if Trump wins, and it will be boosted if the Democrats sweep. So this is a Bloomberg article. It's not my opinion. Let me be very clear. Goldman Sachs economists gamed out the potential economic implications of a Republican or Democratic victory in November, cautioning the U.S. GDP faces a hit in the case of a win for Trump. Quote, we estimate that if Trump wins in a sweep or with divided government, the hit to growth from tariffs and tighter immigration policy would outweigh the positive fiscal impulse from maintaining tax cuts. That's a Goldman economist, Alec Phillips. GDP would see a peak hit of 0.5 percentage points in the second half of next year in that scenario, with the effects abating in 2026. That's assuming like 20% hike in China tariffs, blah, blah, blah. If Kamala wins, Kamala Harris and the Democrats secure control of both chambers of commerce, quote, new spending and expanded middle-income tax credits would slightly more than offset lower investment due to higher corporate tax rates. That would result in a very slight boost to GDP over 25 and 26. What are your thoughts? Is it impossible to really do that kind of analysis? Or?
I think it is. I think it's just it's a great guess that gets on.
We're talking
I
about
highly
it.
respect the Goldman economists, and Goldman's a great firm. I often get asked,
I was going to say, how many elections have you had to comment on as a strategist? All of them?
All of them.
Yeah.
So we often get asked, if Trump wins or if Kamala wins, what's the market going to do? And we come up with an answer, which is crazy, because it depends on how the market's acting going into it.
Okay.
If the market's up 10%,
what's the setup?
What's the setup? You cannot react to, you can't trade something today on a guess in the hopes that it acts the way you think it's going to do before you've seen how it reacts going into it.
Do you think volatility will ratchet up going into the election?
Yeah.
I do.
I do as well.
And that's not like an out of consensus call. I think that's what most people expect.
Yep. I think so. I think that interesting when you look at, all these people who think they know what's going to happen with this, that, we don't know. And to our earlier point, our callback is, if you are a short-term investor, you can try to game it out and do the best you can. And if you're a long-term investor, look past it. Look past it. I know that there is sort of a bugaboo about taxes, and without taking a big opinion, what I want to be clear about is that corporate tax rates are locked in. Personal is not. And the personal tax situation will be sunsetting at the end of 2025, meaning we revert back to before the Trump administration tax cuts. This is a massive issue. Yeah. And if they do nothing, they will revert back. So if we have divided government and everyone's freaking out and we can't, we're going back to where we were in 2016. And remember that Obama let that happen.
Yeah.
And you know what? I think that when they let that happen in Obama, that actually delayed the recovery from the financial crisis.
I think there'll be a deal. I think there'll be a deal because I don't think the Democrats want to run in the next cycle as the tax hike party, even though they are the tax hike party.
Well, show of hands. Who wants their taxes going
up? Here's my
I'm willing to pay more taxes. I really am, because I think tax rates are so low. But what it says to me is right now, like, everybody better convert to Roths as quickly as you possibly can if you really think tax rates are going up.
I just heard Kamala Harris today, basically trying to, I think, preempt the debate. Say, okay, remember we were talking about 40% capital gains tax for $1 million annual income households? No, we won't do that. We'll do 28. It's at 20 now. 28's not great.
It's 23.8.
40.
It's 23.8 for the highest, right?
Right. But so 28 is not great, but
No.
she's already countering what she knows he's going to do at the debate, which is turn that into a huge issue.
But at the end of the day, nobody should be investing thinking they know how markets are going to react or even the economy is going to react at this point. We have no idea if if tariffs are, if there's is there a real trade war? I mean, I think that in 2018, we probably would have had much more robust growth had we not had a lot of our trade shenanigans going on. But we did fine. So who cares? Like,
Well, that's the point, because you're going to do this every 4 years. You're going to try and guess. Every 4 years, you're going to get it right.
Well, you also have to understand how the players on the board have changed. It used to be the major active portfolio managers drove the day-to-day and intermediate term stock market.
Yeah.
Now it's algos, quants, and passive.
And ETF flows.
Right? Like there's no new money coming into active management. That's why there's not a great calendar of IPOs and secondaries taking place. Because if there's no net new money coming into active,
who's going to buy these new
index
stocks?
fund,
Right.
The indexes
they can
won't buy
buy them,
them.
but they
Right.
got to sell it. The
Yeah.
index can't buy them. So the active manager has to sell something to buy it because they don't want to be in, especially given how the market's acting, in a lot of cash. So the capital markets and the public markets have a challenge. And that is, until you find a new flow of funds into the public markets, you're going to be driven much more by the algos and the quants and the index folks than you are from a smart player that you're advising.
The algos
So to
aren't
me-
as fearful about election outcomes. you're saying.
Correct. So what do you do in a situation like that? And what I've tried to do and guide is, rather than trying to anticipate what happens when either one wins, I want to be prepped based on if it's up 10%, how it's going in, raise a little bit of cash so that you can act on a dislocation that might come from either side.
I love that concept of I'd rather react correctly than predict correctly, because
Correct.
I probably can't predict correctly.
I know I can't.
Before we run out of time, I want to do one more thing. I thought this was really interesting and definitely a sign of the times. The New York Times, they did a piece 2 days ago. Was this summer European tourism reached a breaking point? They have these photos of Santorini and some of these places in like Greece and Italy that have just become so incredibly overrun by Americans with their selfie sticks and their fanny packs, and just like these
my
are
fanny pack.
these are towns that are 2,000 years old. They're not built to accommodate cruise ships dumping 300,000 people a day onto these islands.
who very rarely spend that much money once they get on the island.
The locals are shooting these people with water guns. They're doing graffiti on the walls. No more tourists. Like, the locals have had enough. And I, as an Instagram user, have also had enough. Like, honestly, congratulations on you're on Mykonos. Go yourself. I'm good. I saw you last year in the south of France. I saw you the year before in Puglia. I don't give a shit then. Definitely
Says
don't
the
give a shit
guy
now.
who posts everywhere.
My Instagram is a work of art. Everyone else's, it's like enough with
You
Europe.
really got to go see. No, I don't have an Instagram.
Did you know anyone who wasn't in Europe this summer?
Well, I'll tell you what
You mean outside of the
How do
Dwyers?
you like how I answered that question?
Yeah.
How do you like how I asked that question? Did you know anyone who was not in Europe this summer?
I will tell you that of my cohort, especially if you're not on the academic calendar, nobody's traveling to Europe in July or August.
to be an
no
idiot, right?
way. And so it's October and November, and actually December are the new big months because guess what? Climate change. You don't want to be in Puglia in the middle of August
God.
and all that. So
I did that 2 years. I was in Amalfi in July
Exhausting.
2 summers ago. I went through like 5 t-shirts a day. It was almost like
It's almost like you can't breathe.
it's vacationing on the surface of the sun.
yeah, it's no
So-
fun. I think that what's also funny is that those weird clickbait stories, which I clicked on, by the way, because I did want to see those pictures. But I also think that, what does it feel like to be the person who's like, I make 50 grand a year and I'm looking at the New York Times and I'm looking at this. Like, I hate everybody in this,
Yeah, I
in
agree.
this story. And
Yeah.
and I don't know, like, kind of bums me out that like, that's what we're
Well,
covering.
once they see these pictures, they're
They
not
won't
going to
wanna
say,
go.
I wish I was
Yeah, I wish I could go to
I wish I
Trenton
was
in
in
August.
Athens. They have like people dropping dead on the steps of the
Yeah,
Acropolis.
exactly. We could do that
So-
here. I had to go to Tampa for work in July. I said, I'm the only schmuck
Oh,
who
the
has
Europe
to go
of
to
the
Tampa.
Southeast.
Exactly right.
Yes.
I had to go to Tampa for exactly one
Shout out
day.
to our Tampa fans.
By the way, you know that I'm wearing this beautiful shirt. I get
Yes.
to Tampa, no cabs. Right? I'm a nice gay girl. I'm a nice Jewish gay girl from New York City.
Yeah.
Very liberal.
No Uber?
There was no cabs. I get an Uber. I get into the Uber. The guy's wearing a MAGA hat.
All right.
Just
Rock
okay.
and roll.
So what is I made a decision in the moment. I was proud of myself, actually. I said, you know what? It's a human being.
That's right.
You don't have to like be a bitch about this. You
That's
can
right.
just be like, okay, how you doing today? How's your work going? How your rides been?
Yeah.
And that was very nice.
Did you say that or did you just think it in your head?
No, I said it. I engaged with him. I decided I was like,
Right.
I'm not going
It's
to
weird to be an Uber driver and pick somebody up in a MAGA
who
hat.
can- who
It's
can
almost
you
like you
help?
want half your
Yeah.
customers not to tip you.
It's
a weird
It
thing.
was a bad business decision.
Yeah.
But anyway, that's what I can share.
All right,
with
you guys have fun on the show today?
No, it's terrible.
All right, we'll do it all over again.
Fabulous.
Guys, it's been such an honor and such a pleasure, Tony. As we said at the top, we revere you, and we just want to say thank you so much for everything that you've done, and thank you for coming by today.
And congratulations.
Now
Guys,
that you're off Wall Street, we could have you back, but you can come on from the perspective of somebody running a small business.
Yeah, well, I help the guys run and
Help them
help
run
the
it.
employees run the small business. But I do want to say,
Yeah.
there's a new generation, I think, of people with great insight, and I think you're in there, and I hope that you stay with
Oh,
it,
thank
and
you.
I hope that you maintain the integrity and honesty that you show during, because people need it. Michael,
yeah.
it goes without saying with you. It's a team. I look at you guys as a team.
We
That's what
appreciate that.
But also, I'd be remiss to not thank Canaccord for the years and the,
Oh,
and the
100%. Shout out
quality
to
they gave
Canaccord.
me while I was there for 14 years, and the people that I worked with.
Shout out to Canaccord.
Very grateful for my kids letting me work there and the employees that we serve.
Do you have a favorite for us?
What do you mean?
Book, movie, TV show, restaurant, trip, anything that
I
the
wish I
fans
had
want to
time.
hear?
I wish I'm going to go to Alaska probably for my 60th.
Okay.
I'll do that.
Amazing.
All
Do
right.
some halibut fishing, maybe go take a float plane into the interior and catch some big trout.
Alaska a little bit more habitable than Puglia.
But
So-
can you see me sitting on a beach doing
No, no.
nothing?
Tell me,
That's a
I'm a-
heart attack. For
I'm an
not for you.
outdoorsman myself, and I went to, right, Duncan? I went to Alaska.
Duncan is like in hysterics over here from you today.
I went to Alaska a couple of years ago. Fabulous.
I
Just
had
incredible.
a great time. I went there one time, did halibut fishing. That was bananas. And I also want to thank Jill for her kindness and the time
You
that
don't
we
even
spent
know
together.
me, but thank you. You're a doll.
Jill, do you have a favorite for us?
I have a great favorite for you.
Hit me.
There is a woman, a writer. Do you guys watch that show on Apple that was called Fleischman is in Trouble?
I
Did you watch-
loved.
Okay.
Yeah, yeah.
So the author of that book is Taffy Brodesser Ackner. Mouthful. I get it. She wrote a book called The Long Island Compromise.
I'm in.
It's okay. So
Done.
I just got to tell you, like a little bit of the setup is that there was a kidnapping in Nassau County of a manufacturing guy. This is true. It happened in the 70s. She was friends with this guy's son. The guy was kidnapped for 5 days, like a first generation Jewish guy, lived in the North Shore. And this is a fictionalized version of what happens to the kids, the 3 kids, and the story evolves and you learn about like from everybody's point of view. I loved it. It is fiction. It is the descriptions. You guys will laugh. I know no disrespect to everybody watching, but like there are certain things that you really have to know from Long Island that would make you laugh yourselves. Like
Yeah.
how long it took for them to get to JFK to LaGuardia or whatever. And
Yeah.
it's well written. It's very engaging, and it is an intense family drama. I cannot recommend it more highly.
I love this.
Excellent book.
And it's called Long Island
The Long Island Compromise.
Compromise. All
Fleischman
right.
is in Trouble. I felt like that was like written for me or for us.
Yeah.
I like love that.
Yeah, it was interesting. And it was interesting how she turned the story around.
great.
Yeah, it was very
Really
good.
enjoyed.
You guys want to see a good movie?
Yeah.
100%.
Michael Keaton fans?
Yeah.
Knox Goes Away is the best movie I've seen
You're kidding.
in 2024.
Wow.
It was Netflix. What network is Knox Goes Away? Is that Netflix? Yo, are you on
Yeah.
the planet with us today?
What do you mean? I'm looking. Yeah.
I know you're looking at it right in front of you. So what network is it on? Before I tell people the wrong place.
I think it's on Netflix. I
think
saw
it's
this movie.
Netflix. Did you watch it?
Yeah.
This is unbelievable. Like some of the best acting that you will ever see. Michael Keaton basically has a form of dementia, and it's like really quick onset.
Oh,
And what is
Oh,
it
no,
on?
it-
It's on Max. Okay.
Max. Okay.
All right. So he has like this form of dementia, and
Oh,
his kid gets in trouble. His adult kid, who he's estranged from,
Mm-hmm.
and he basically has like a week to help his kid get out of this jam. And I should also tell you, he's a professional hitman. It is unbelievable.
Okay, I'm in.
And the supporting
That sounds
actors,
I'm in.
some of these actors just come in and they do one scene, but they're so good you almost like can't even believe
It's a movie, not a series?
it's a movie. It's
Okay.
an hour and a half movie. It's
Okay.
not a huge commitment, and it is unbelievable. I'd be shocked if they don't nominate him
Okay.
for 1 million awards. So highly recommend
I
it.
was thinking of American Assassin. I did not see Knox Goes Away. This is back to back like
This is insanely
action
good.
movies from Michael Keaton. That's weird. I saw today. Ramp text sent me this DM. It was the New York Post. Michael Keaton's real name.
Mm.
Michael
Batnick.
Michael Douglas.
Oh, you
Oh,
kidding.
that's kind of weird.
His actual name is Michael Douglas. Which there's another one of those.
I guess so.
He couldn't go by Michael Douglas.
I think that those some of those streamers, like the movies that go straight to the streamers, I lose the thread. So that's excellent.
So if they put this into a movie theater in 1989, there would be a line down the block to see
Yep.
it. If they do it now, it doesn't even earn the P&A money back, prints and advertising.
Mhm.
So I understand why it's going direct, but I think that's like part of the cool factor that you could just watch a cinema quality film on a streamer the day it comes out. You don't have to wait 9 months. You don't have to go to Blockbuster.
the movie Hitman with Glenn Powell on
Yeah.
Netflix.
Yeah.
Incredible movie. And actually, the Hollywood Reporter wrote an article today about Neon and A24, these two like indie
Yep.
studios that are competing head to head. Neon wanted to bring that movie Hitman to the theater. They offered $10 million to distribute it, and Netflix came in over the top with 20. So not in the movie theater, straight to Netflix.
and it still worked.
It still worked. Great movie.
All right, guys, that's it from us this week. I want to say special thank you to our two guests, Mr. Tony Dwyer, and of course, Jill Schlesinger of Jill on Money. When's your next episode on the
I don't
compound?
know. I have to see if I can convince these guys to actually
my God.
tape me at
Oh
Future
my God.
Proof.
All right, you're going to be at Future Proof.
Duncan,
Yeah.
step in.
Hey, great job this week, John, Duncan, Rob, Daniel, Nicole, Graham, Sean, Chart Kid Matt. Thank you so much, Compound Nation. Thanks for listening. We'll talk to you soon. We're out.